All right, mate. So let's get a look through some of these. Like comp, I'm a big fan of comp anyway, but I'll start here with comp. You know, when you drop, it's down 94% here. I'm kind of annoyed at myself that I don't own any comp. I think I should just bite the bullet and buy some. That's my kind of feeling. I should just bite the bullet. My problem is that I've got that many coins now. Always concerned with what if the market does, crash lower. I don't want to be leaving myself short. But I have to say that comp is one of my favorite coins that I don't own, that I would like to own. Down 94%. We've had this big drop. We're starting to put in this base. We talked about this being very similar to ADA. Let's just look at this. So we kind of talked about this many times in the fact that you put in this bottom, you put in the bottom here. This was 96% down, I think, on ADA. But anyway, it moves up into the white 100 and kind of drops back and then gets above the white 100 and kind of curls round. We are curling round here, but we're curling round underneath. This curled round above. Obviously ADA was slightly more bullish, but comp has now recaptured the white 100 moving average. Technically this is bullish, and if anything happens like what it did on ADA, well then the market can bounce maybe into the merge and into the end of the quarter or whatever, and get a pierce up into the red 200 moving average and even above it. So it definitely is interesting. Like, I want to show you the 3-day chart here as well. You can see that we bounced up into the white 100 moving average. We are somewhere here. This is where we're at here, somewhere in theory. So you can see that we once it got going, we bounced up. We did not wait for the white 100 moving average to come down into price. The price was like a magnet and was drawn up into the white 100 moving average. So that's important. Are we about to do the same thing here on comp? Are we about to get drawn up into the white 100 moving average into a pierce above it? So that is extremely interesting to me. Bitcoin's formed a bullish month. This has formed a higher low here, just like this has formed a higher low. There's many ways to kind of draw out this pattern. Is this do you want to put a bullish triangle on it or something, and then it breaks up? Like we easily could put a very similar pattern here, a bullish ascending triangle that is in the process of breaking up, and most people don't understand or don't realize that it's a bullish ascending triangle until it already breaks up. So I was looking at this yesterday. I posted in the group. Actually, I posted Sol bullish triangle in the group, but comp is very, very much the same, and I feel the same way about Sol and comp. I really like both of them, and I want some exposure, but I would prefer it to go lower, but the market doesn't care what I prefer. So like if I just zoom out here, we can kind of see what happened, and we could kind of visualize both. It's extremely interesting. Are we just about to break out on comp, and then make a run for it into the white 100 moving average and even above the white 100 moving average? Then people are going to be kicking themselves they didn't buy down here, and I'm feeling that already. That sort of pressure, if you want to call it that FOMO is a better word. That I really do not want to miss this bottom. It is down 94%, but of course with the economic situation there's always the worry that it can go lower. Yes, but I just paused the video there. I forget what I was saying now, but the bearish argument, the bullish argument obviously is that we are here and this is here and we are going to break up from here. The bearish argument is that it's going to do something similar to ADA. Now you can see here that ADA that is 95.8% down at the lows here, and basically this low here was also 95.8% down roughly. So this low here is almost identical to the low here on comp. ADA still had another flush lower, kind of meaning that this triangle failed and we went lower. Is this triangle going to fail in a one more leg lower, just like comp had one more leg lower? It's interesting, but if you had bought somewhere in there in the middle of that pattern, there was actually still another 64% drawdown. So obviously, if you put $10,000 on it or whatever, you would lose. Well, you wouldn't lose, but you would be in a drawdown of 60% or $6,000 of every 10,000 you put onto that. But of course, if you had started to average in 2, 3, or 4 buys, you have to think that this was a good buying opportunity. Like for example, if your first buy was in the middle of that cluster, and it didn't actually hold and was the low. Of course, if you bought again somewhere, maybe a double bottom, or even ideally lower than double bottom, and a couple of buys down at here at the very lows, somewhere down into that 97% drop, 98% drop what it ended up going. You would have had a very, very good average down on the lows. Maybe it is best to have small entries here and keep your larger accumulation parts for down the bottom in case in case we get that other flush. You want to bring that average right down as best as possible. But also it is nice to have some exposure in case there is the big move up, like this, in case this pattern breaks up. So I am very tempted to buy some small amount of comp here at 94% down. But as if we go here very quickly, you can see that is literally 93.5% down. So it's not great. Let's look at that. That's where you would be buying right here. And if you had bought there your first buy, you can see that you were in a loss for a full year. But you obviously, the goal is to average down and get that average price right down. So not saying that the two of them are going to play out the same. They're not. But I'm just trying to compare to ADA here to show you always need to look at the worries, the potential risks. It's all good trying to say that this is the bottom, but what if it's not the bottom? The other thought process is that it would be nice to get in here and sell. If it is going to bounce, there's 100%, 150% bounce, depending on where you got in, of course. Maybe you got in a bit better down here and you didn't time the top, but 100 to 150% bounce, you can see is very possible. But you could use your original investment and the profits to be buying back down on double bottom if we get it, of course. And it's a gift. You can see that we actually came down and stopped onto the lows right here, which was an absolute gift on ADA. If comp done something similar, then you would have double your investment to be buying down in here. But I suppose that's dreaming at this point to think that we're going to get a stop hunt like this again. Don't get me wrong, it's very, very possible. But it's still a fantasy and a dream, because you never know if it's going to happen. If we get that situation, we really, really need to be capitalizing on that. So I like comp here, even though it might be here and there might be one more drop. It's tricky to call. If buying, you always need to be prepared to add lower. This video was not supposed to be just about comp, but I want to buy comp myself, and I'm kind of itching to buy a little bit. You can kind of see the similarities. You put in this base, and from the base it actually broke up. Comp has also put in the base right here. Is comp going to break up into the yellow 9 EMA? It is formed a bullish monthly engulfing candle at this point. I'm not really a fan of this exposed wick down here. It's never been tested. Kind of tells me at some point, even if it does bounce, at some point it probably should come back down lower. and take liquidity in this wick and even go below it would be a gift. I don't know if we can get that, but it does. The chart itself does suggest that at this point this is a bullish monthly engulfing candle, kind of suggesting that we can go higher. There are 17 days left in the month.